Welcome to SB News Podcast. We look at the fundamental aspect of the economy and its impact on the Forex future and the stock market. Any opinions expressed here are for information purposes and must not be taken as investment advice. The European Central Bank hiked its interest rate by 25 basis points on Thursday. This brings the deposit rate to a record high that was last seen during 2001. While this is the ninth straight increase of interest rate for ECB, the autopilot increase in interest may be at a halt for now. ECB President Christine Lagarde stated more interest hikes are possible if inflation and price pressure remain high. The rate hike indicates that the inflation is not yet at the 2% medium target rate that has remained ECB objective for inflation. The Governing Council also resolved to set the minimum reserve remuneration at 0%. The adjustment will take effect on September 20, 2023, at the start of the reserve maintenance period. This means that the ECB will no longer reimburse banks for the money they must retain as a minimum reserve. Banks typically generate a large amount of income from the minimum reserves they keep, and without this income, they will need to find other sources of revenue to compensate for the loss of income. In an estimate released by the Bureau of Economic Analysis, U.S. GDP increased by 2.4% in the second quarter, surpassing the 2% increase of the first quarter. Although today's GDP release is susceptible to revision, especially since the source data are incomplete, this has raised a sense of optimism in the market. Consumer spending and non-residential fixed investment, which includes commercial real estate and equipment, drove economic growth in the second quarter. Housing and utilities, as well as healthcare, accounted for most of the service spending. Along with today's favorable GDP figures, the Department of Labor announced 221,000 people filed jobless claims in the week ending July 22, the lowest number of claims since February. Unemployment claims fell from June's 228,000 level and also came below forecast of 234,000. Despite favorable figures, the effect of tightening monetary policy may restrain economic activity in the coming days, and we could see slower growth in the rest of the year. You are listening to SB News Podcast. Don't forget to subscribe, like and download our podcast. It helps us bring more contents like this to you. Fundamental analysis of economy for Forex, future and stock market.